Welcome to Stock Shots. We're so pleased to welcome Mr. Ryan Krueger of Krueger and Catalano Capital Partners back to Stock Shots. Krueger is one of the best in the business today, and we appreciate him taking time out of his busy schedule to visit with us.
Ryan, thanks for being back with us on Stock Shots.
Glad to be here.
Ryan, we've seen oil come down in the last few trading sessions. And even with oil above $120 a barrel, it seems like investor sentiment has all of a sudden changed. We've seen some sell-offs in some of the larger and better names, in my opinion. Was this a bubble that has burst, or are we still in an energy uptrend?
Well, I guess it depends on where you bought it. It's certainly a bubble for those who were buying $200 calls on crude. But if you were a secular bull several years ago, your cost basis on a barrel or most of the stocks probably has you believe that this is still a multi-year trend, and it's a pullback within the trend. So it's all a matter of timing. And I think what's actually been more violent in the last month was actually natural gas. And I looked the other day, the last time natural gas teed off at $9, a barrel of oil was at par, which is to say $100. So either natural gas is going to come right back, and I don't think it will, or you probably need to prepare for a little bit lower levels on crude. Now, what that means for the equities, they may have already discounted it. Their moves were even more violent. I looked, and for full disclosure, and to give you an idea what kind of month I had, XTO is one of my longest longs, and it lost 1/3 of its value in 1 month. And I did not sell one share. By way of context, I own it at about $7 in 2002, but if you look back, even just widening your lens a little bit, in the worst of pullbacks, you'd still find even a stock like XTO year-to-date is substantially outperforming the broader market. If you go back 5 years, it's more like 400% to 30% compared to the market. So I am a secular bull. I still think we're going to have enormous pressure on natural resources, and energy happens to be one of them. But I think it's dicey short term.
Yeah, it has definitely been a volatile up and down. Some of the stocks that I've watched, Rig, Diamond Offshore, National Oil, Varco was one that came out and reported great numbers, had a great day the day that it reported, and then pulled back terribly yesterday. These companies, in my mind, and just with my common sense approach, look like they're going to make money with oil anywhere north of $80 a barrel. Has the sell-off in some of these names been overdone due to the rapid pullback in crude?
Well, I think you probably have done some good work. I mean, we've said all along going into this quarter, despite and really even before the pullback, and despite the bullishness, we thought estimates were way too low, and they have proven to be in most cases. I mean, I'll sum it up the best way I can. And Rig, as you mentioned, and we had talked about, happens to still be a long for us. I got on the phone with our biggest ace in this space immediately after the offshore drilling possibility was announced by way of new legislation, and this was yet another reason that oil should trade all the way back to 80, and of course it hasn't yet, but it certainly took some air out. And I asked him what he thought, and his answer was simple, and it defines a secular trend. And he said, good luck finding a rig. So we can talk all we want to about politics and policies. The supply and demand for rigs is tighter than tight and remains so, and that's not something that gets fixed quickly.
Absolutely, and you know, I'm located up here in the area just outside the Haynesville Shale, and we're seeing guys up here leasing and paying bonus payments that, in the past, if a landowner got to a couple of $100 an acre, they felt like they got a pretty good deal. Now we're seeing, even in our area, $12.50 an acre easily. Over in the shale, $30,000 an acre. So, yeah. Again, with a common sense approach, I don't see these companies paying a $30,000 an acre bonus without the intention to go get a rig and poke a hole. So I think that demand is going to continue. One other thing that I wanted to ask you is we've seen the ag names roll over, and last time you and I visited, that was one of my questions is, is the ag play getting done? Because I've jumped on the trend too late, too many times in my trading career. What do you see in ag right now?
Well, I think, and you and I have spoken, so I don't think you were one of these truly late longs. But, old friend of mine who I learned a lot from, starting to trade some of those futures, 12 years ago, had a phrase that I was reminded of the other day. He said, now's the time they get returned to the rightful owners. And in any good bull market, commodity stocks, bonds, or otherwise, late longs to a party are often escorted out with extreme prejudice, and the market has a way of punishing late longs. I had a chart up that I put up in Minionville probably 2 days ago that kind of gave a picture of where I thought we were in this cycle. For folks who may want to check that out, there's a commodity bull run is not over was the title of the article, and simply put, and one point of reference, then I actually highlighted this in the chart, there's been 16 ethanol firms that are in the process of bankruptcy this month that I know of. And that sent, corn futures, which has kind of been the leader of the band, on your ag question and the ag complex and all the equities that are needed then to support, plant, grow, and fertilize the stuff, cascading down, and bounced right up against one of the technical support levels that I mentioned and showed there. And I believe that'll hold as, like I said, being returned to the rightful owners. I think I'm one of them. I hope I'm one of them, because I was buying corn before ethanol was even a factor. I believe there's pressure on grain prices without subsidies and silly politics. Most of those have now been swept away. You don't hear about that anymore, and as I said, 16 bankruptcies in 1 month is a pretty good indicator of the direction of that business. It was economically a myth. It was never going to work. I said as much. I made a bet that nobody took me up on 2 years ago. I said I'll wear a Longhorn hat to a Cornhusker rally if ethanol turns into a good business. And I don't think I'm going to have to pay out on that bet. But where are we now, and as it relates to some of the equities, I also think we'll flush out late longs. But I'll give you an idea long term about the supply and demand and the pressure that I still see on these natural resources that are needed, minerals, fertilizers, that is, to get this stuff growing, which we still don't have enough of. I called a farm 1 hour outside the largest potash mine in the world, which is in Canada, and he told me he could not get any more, and he is 1 hour away. Imagine what that's like for farms elsewhere, South America, North America, and around the world, because there's not too many of these. And the fertilizer companies, which I know is part of the question, have just reported blowout numbers. None of the analysts were prepared for it, so now they're scrambling back and they'll revise all their numbers considerably higher. I'm still long, but I also have tight stops on trades because the moves will be violent.
For the rest of this great interview, visit our website, www.stockshotz.tv. That's www.stockshotz.tv. Thank you for listening.